Sadek, thank you so much for joining us. I want to get right to it. Give us first your broad overview of how you see the state of U.S. infrastructure when it comes to both sustainability and climate resilience.
Great. First of all, thank you very much for having me, Diane. The state of our infrastructure really received a major boost through the IIJA, which was passed by the president on a bipartisan basis. And it really has fundamentally changed the way we look at infrastructure for the very simple reason that for the last decades, going back to the 1970s, the United States invested less than 2% of its GDP in infrastructure. Just to give you comparison, China, during that period, and I should say it's more like in the 1980s, because in the 70s, China was dealing with a cultural revolution, but in the post-80s period, China invested over 8% and sometimes over 10% in years of its GDP in infrastructure, 4 to 5 to 6 times more than what the United States has invested. So we have been so behind in investing in infrastructure that the infrastructure bill passed by the president on a bipartisan basis really is a fundamental change, because it will allow us to bring it up to the level which I think is extremely important. And from there, we can then start talking about sustainability for our infrastructure. And so when I look at this, we're good at doing renewables on the power sector, but on other areas, we're way behind.
So the public infrastructure, the public infusion was obviously a great boost, but why is private funding still so necessary?
Private funding is necessary for several reasons. Number one, because the amount of capital that is being allocated to infrastructure, including that $1.2 trillion, is not sufficient. You need several $trillion more of infrastructure really to be able to not just maintain it, but go exactly what you're saying, to go to a sustainable level and to take our infrastructure in the 21st century. That is the key element. The United States government, both at the federal level and at the state level, do not have that kind of funds. That's number one. Number two, in many respects, and studies after studies after studies show that when the private sector is involved in managing these infrastructure assets, they tend to be more efficient and done in a more cost-effective way. It doesn't mean that that is true for all infrastructure assets, and there is zero role for the government. Not at all. In many cases, because of market failures, like, for example, extending fiber optic to rural areas. The private sector is not going to do that if the economics are not there. Government should come in doing that, absolutely. So there is a key role for the private sector and a continued role for the government.
Now, I've seen a lot of private capital going into climate, whether it's small startups or bigger things that are already underway. But given what else is already going on in the economy and the crunch we've seen recently on the banks and investors pulling back and concern over money sitting on the sidelines, where should it go? Do you feel like investors today are still aligned with the perspective of we need to get as much money into infrastructure and into sustainable infrastructure as is needed?
Absolutely. I did a survey a couple of months ago, which is available on the website through my work at NYU, New York University, where I'm a senior fellow there, asking precisely a sample of 1,000 people. Would you be willing to pay more for your infrastructure through higher user fees if it helps in terms of climate change, in making the infrastructure that you use more sustainable? The overwhelming number of people have said yes. As an interesting statistic, there's more yes from millennials and new generations than from baby boomers. But that's put aside. Overall, everyone is supportive of it.
Now, there's a lot of talk about a national infrastructure bank. If you could simply just explain what exactly that is and if, in your view, why we need it.
The National Infrastructure Bank is critical precisely for the question you asked me earlier, which is, do we have enough money? Do we have enough funds? And a National Infrastructure Bank whether it's ultimately owned by the government, but the most important thing, that it has to be an independent bank that looks at the project on a cost-benefit analysis and invests where the rest of the market is not able to provide that kind of support. It will act as a catalyst to be able to do the kinds of things we want to do, to continue investments, and at the same time to invest in precisely sustainable infrastructure investment. So I'll give you an example. How many New York cities equivalent need to be built for the coming years because of the move to urban areas? And let me tell you, we need one New York City every month for the coming 40 years. That means concrete, that means steel, that means all sorts of products. Steel today is produced mainly by coal. The steel that we have on our wind farm blades is produced by steel companies that use coal. So while we're helping the economy on one side by having wind-generated power, at the same time, why are we producing, how are we producing that steel? Through coal-fired plants. How are we going to build this New York every month? Through, again, bitumen, steel, concrete, all massive consumers of CO2 or emitters of CO2. So at the end of the day, we have to be able to have the ability to galvanize the capital and to integrate in our infrastructure sustainability in a way that is not dogmatic, but at least commercial, makes sense so that it's fully sustainable.
Now, it's one thing to want to invest in sustainable infrastructure and climate resilience, but investors also want returns, plain and simple. How do you convince them that there is a sizable return in this kind of investment, not just for the planet, but for their funds as well, especially when some things like the carbon credit markets are still not really fundamentally solid yet?
Absolutely. I think you have to have sustainable investments that make a return that is acceptable to investors. Otherwise, you will continue to rely on government subsidies, and that doesn't make any sense. But I think what we're doing is, as we invest in that technology and we're able to mass produce it, which is what happened with solar panels, at the end of the day, the technology in solar panels is the same as 30 years ago. The fundamental difference, I would say, are two. Number one, government got serious about it and provided subsidies. So as a very clear indication, without those government subsidies, we would not have been able to do that. And number two, because of mass production, the cost of building these panels came way down so that it made the economics today much more attractive to investors.
What is their reluctance, do you think, in any state to get into more sustainable infrastructure? When you talk to them, what are some of their concerns?
Private investors want the following. They want, as you said, a steady return, visibility on the regulation. A regulation that changes every other day is not helpful. We saw that on the production tax credit related to wind farms. When they came to sunset, would Congress renew them, not renew them? And you don't produce solar farms or wind farms overnight. You have to plan them. It takes you 2 to 3 years. And if you plan today and you're not sure of the regulation 2-3 years hence, well, guess what? You're not going to invest. And so we have to be able to modify that. And that's extremely important. And the IRA that was passed by the president, that's absolutely right. Is it on a federal and state level? The federal may have very clear rules. The state may not, or vice versa. And so that coordination is important. And the IRA bill, I have to say, is unique among any other country in the world to have really provided an extraordinary boost to fundamental sustainable investments, especially in infrastructure in the United States.